Hello, everyone. Welcome to another episode on Stockertim. Welcome to Stockertim, the investors channel. So today, the market has actually shown us a big, and the market has taught us a big lesson. And what's the lesson about? The lesson that if you remain in the market, if you understand the market, that the market works in cycles, and the market is not divorced from the real world, you will reap the benefit of actually being an investor. The market really has come back real hard since China and the US started talking, and they started having a very much more respectful and cordial communication, and it's likely that we get a very good deal. So what I want to do in this episode is to actually share my opinion on what I actually think is likely going to happen to the S&P 500, the Nasdaq 100, and also your portfolio as well. Because if you own any stock that is actually within the S&P 500 and Nasdaq 100, you will really need to watch this episode. So stick with me. If you haven't subscribed to our channel, put on your notification bell so that you don't miss any episode that we bring to you. And of course, every information shared on this channel is for information and education purpose only. So do your due diligence or consult your financial advisor before making any decision. I'll go ahead now and just show you what I think about what's going on in the market and where we are likely to see things shaping up. Join me. So this is the chart showing the year-to-date performance of the S&P 500 and the Nasdaq 100. These are the two most important indices in the market, and you could actually see the huge drawdown around the 8th of April when the market became very negative, and there was a whole lot of tough talking and a whole lot of give and take between the US when they were having that disagreement as to how much tariff each side should actually be charging. Now we are past that level, and you could actually see that immediately China acknowledged that the US and China have actually started talking to agree on a 90-day pause and also agree on a substantive trade deal. You could actually see that come back. You could see that the Nasdaq 100 and the S&P 500 has actually now gone into positive territory. The market is open as I speak, so you could actually see that this could actually be trending up. Now, what this has taught us is you have to actually remain on the market, understand how the market functions for you to actually get the best benefit out of this, for you to build a more reliable, more sustainable portfolio. And what do I mean? When the market trended down all the way from the top where it was about 2% for S&P 500 as at that time, year to date, and about 2% as well for the Nasdaq. When the market trended down, that was actually a very good opportunity to start acquiring and accumulating position. Not necessarily the time to sell, not necessarily the time to actually panic and take on huge losses. It was actually a very good time to buy some of the best stocks at a very affordable valuation. So what do I mean? It means that you need to remain on the market. You need to also understand that the market is not divorced from the real world. Now, the big lesson out of this as well is that you still have to pick individual stocks. Yes, if you don't understand how the market works, you don't understand even the stock market, how it works, what is a stock, what is a share, what is a dividend, what is a P/E ratio, what is valuation, what is market cap. If you don't understand all of this, it's absolutely fine. But as soon as you actually start building your portfolio, you actually need to pick individual stocks. And how do you pick individual stocks? You pick individual stocks, so you still have to pick your own stocks, and you don't necessarily have to rush to pick stocks. You just basically have to understand that to pick winning stocks, you need to do research. You need to learn more about these companies. You need to take your time. You don't necessarily have to pick so many stocks, but as you start researching into a company, You start, looking at their balance sheet. What do they do? Start with their website. Start with the product and services they offer. The kind of people that actually compete with them. What kind of feedback do you get from their customers? So that will actually be able to give you more idea on whether this company is worth investing in, whether this company is something you can put on your watch list. Let me give you an example. One of the stocks that we picked on Stockertim, one of the stock which we were earlier investors in this stock, Palantir. A whole lot of videos that we've done about this stock. This stock, if you go to year to date performance of this stock and you compare it with, say, the S&P 500, which is the most popular and most important index, you could actually see that Palantir year to date has delivered over 70%, whereas the S&P 500 is just struggling to do 1% because of the pullback. So despite the fact that there was a huge pullback around late February, and this stock still managed to deliver over 70% year to date from January till now. That doesn't necessarily mean that you pick every stock and you're going to make 70%, 100% year to date or in 2-3 years. It just means that to build a very strong and growth oriented portfolio, you still have to pick stocks. Yes, there's risk to your capital. You have to do your due diligence, but the beauty of building a very, very solid portfolio is to be able to grow your capital over time. So if you want to learn more on how to pick stocks, or idea of stocks that you can actually look into, you can join our community. I'm going to drop a link to join the community. I'll drop it in the description of this video so that you can learn more on the kind of stocks you can look into, depending on the kind of person you are, your background, your risk appetite. And it is not financial advice. It is not telling you when to invest and how to invest. It is basically giving you the coaching and the guidance. And there's also risk to your capital when you invest in individual stocks. The risk is even higher. So you actually have to understand that you are picking stocks that you want to build with over time. You want to own over time. It is not a get rich quick kind of approach. So I'll drop the link to join for you to learn how to join the community. Till the next time when I see you, I will be talking more about IPOs that are now coming into the market, because it is a season of IPOs. A lot of companies are coming into the market for the first time. Should you be buying or ignoring these stocks? I will share my opinion in the next coming episode. Thank you so much. Take care and bye bye. Keep investing and keep growing.